Thank you, Sierra, and thank you to the audience. Welcome to our panel and welcome to the panelists. Our title today is Blue the New Green? This was a phrasing that occurred in my head several months ago, and I was just reacting to what I was feeling. My startups have worked so hard for years to get to zero carbon, and they wanted to win, and winning for them was often defined as reducing emissions the mostest. Uh, but as they, scaled and they started to integrate with their corporate partners, the vast majority of them were learning that their products were going to be blended. Was it fuels? It was fertilizers. It was fibers. It was chemicals. It was going to get blended anyway, meaning the end customer wasn't going to get zero. They were going to get, blue, right? And that was for a lot of reasons, not just the emissions. It was to make sure that the product had consistency and went through. And if the end consumer was going to get blue, why were we so obsessed with green? As well, many of my startups were out in the marketplace of venture and working with partners, and they were being held to this seemingly singular, really high bar, often 1 gigaton a year, and they're being told, "You're not eligible for investment," or "You're not climate tech because you don't meet this bar we drew in the line." And we would be like, "What about being a really great company? What about we're gonna make money? What about actually being adoptable?" And it felt a very confusing path for founders out there. And, I wanna today ask questions like, does having really strict criteria for emissions really make sense anymore? And did it ever? Are we being too purist in evaluating clean tech? And then, you know, as it happened just a few days ago, uh, Bill Gates wrote a Gates Notes, and it's being described this way and that way. But one of the things he did very clearly did say is that we really must eliminate any need for a green premium, which is a statement that many investors say, but that we often don't see it. And he also did seem to indicate that some of his money was going to go more towards relieving human suffering than relieving emissions. And so this panel is convened. It's the title is inspired by the many shades of hydrogen, and we're here to explore these trade-offs as blue the new green. And I want to start with OzoneBio CEO Khorcheska Batyrova. As a founder, as a startup, you've navigated this world. Can you just tell us a little about how you've experienced this milieu that we're describing here?
Yeah, thank you for the description. I think this is really, really important point, and that's what we actually struggling and dealing with right now. As our startup producing bioadipic acid, it's the main building block of high performance polymer, nylon 66, also polyurethanes, polyesters, and thermoplastics. You can find it everywhere from car parts to running shoes. So it's around like $30 billion market, and there is a huge emission related to the production of the adipic acid coming out of the petroleum sector, leads to at least 60 million tons of greenhouse gases emitted into atmosphere every year. And what we are doing, we're completely trying to replace petroleum-based adipic acid with a bio-based or emission-free adipic acid. And we actually succeeded to scale our production to 1 ton a year. We're right now at the pilot scale of making fully bio-based, certified bioadipic acid out of the wood waste, so which is second generation of the feedstocks. So what happened when we just started collaborating with the different corporate partners, also brands trying to integrate existing volumes of the bioadipic acid that we produce in the company into the supply chain, the question rises basically not just related to the emissions, but mostly related to the green premium. And we figured out that actually a lot of customers, a lot of industry manufacturing partners out there, they're not planning to use fully bio-based adipic acid into their product. They are actually trying to blend it with existing petroleum-based adipic acid for various reasons. It's either reducing the price of the final product or just because it's much easier for them to blend it as their scale of their facilities is so big. It's megatons, millions of tons of the adipic acid produced per year. So the equipment that is already in place that does not allow them to make a fully sustainable, fully bio-based material, they only can blend it. And because we're at the stage where we can produce only 1 to maximum 3 tons per year, they were like struggling to integrate it effectively into their supply chain. But the awesome thing about our process, we tried like to actually explain to the manufacturing partners is that, okay, guys, you're struggling to integrate like fully bio-based adipic acid at this scale because you're thinking this is small and that it requires like, changes of the some of the manufacturing procedures and stuff. So, how about you guys? Give us some of the petroleum based intermediates, which is like the key point of producing adipic acid in your industry. And that's like final step where you actually taking that petroleum based intermediate, converting it into adipic acid. That is the step which releases tremendous amount of nitrous oxide, which is 300 times more toxic than CO2. So we were offering them, okay, give us that intermediate that comes out of the petroleum based feedstock, and we convert it into the adipic acid without the nitrous oxide release. So we have an alternative approach, green approach, where instead of nitrous oxide, we release a lot of oxygen. It's around 420 liters of oxygen released per 1 kg of adipic acid production using our process, while in petroleum-based industry, in the same step, around 120 liters of nitrous oxide released.
So you're doing green, fully green, bio nylon, right, at ton scale. Awesome.
Yeah.
But you're also now doing, it sounds like, blue nylon. And is there a blue premium, or does that help get us to something that's really much more an affordable commercial product that can be
That is
scaled much
much
more?
more affordable commercial product. It's a one-step green catalysis for us.
Great. Let me bring in Corinna here because I think she's been on the other side of the table from you, but done this great, tremendous investor. Corinna, you've also worked through this journey as we all have. Is your philosophy changing in the last year or last couple years, or is it still the same? Share your point of view here.
Yeah, I think this is really important question in the sense of, are we too much of a purist when we're thinking about this? I've always been a bit more pragmatic in the sense that I didn't think that technology should lead the way, in the sense that we still need a product that wants to be adopted by industry, and that leads to a successful business. And so they're not really thinking about necessarily the underlying tech that is driving that, whether it be, bio or, green chemistry and so forth. And so, with that, we've always kind of led with this thought of, can it be a solid business? Do we understand the incentives for adoption? And, Khorcheska mentioned a few things that I think is very, very real, which is, industries already operating at a mass scale. They can't overnight switch all the equipment, so you want to work towards, as close to drop in as possible, or to really understand how industry is able to not adopt change immediately, but to integrate that over time. And I do think it's quite silly to think that they're going to go from, petrol to, bio right away, because the machinery itself is very different. So I do think it's incumbent on the industry to think about this, and for us to find a good marriage between, I would say absolute zero carbon, or, a particular, carbon emission standard, and really think of it also as, how do we make sure that industry will adopt this and have that be a outsized consideration, and knowing that it's okay. We want to make change, but we can't make absolute change and have no change at all. So integrating it and changing along the way, I think is much more suited to industries that's already established, which is what we're really going for. We're talking about trying to be more sustainable.
Corinna, just one quick follow-up question. It was often the case that VCs wanted, say, as few corporates in around as possible, right, back in the day. Has that changed? I mean, I personally want as many because they're the ones helping us try to solve the problem. What is your feelings on that?
Yeah, I also like to take a pragmatic approach to that. I also think it's win. I think strategics too early when the technology is being developed is not necessarily as helpful as when a company gets closer to the strategic being a customer, We want them invested because we want to understand how industry works, but ultimately we want them as a customer. So I think later stage, after the initial innovation is a fantastic time to reach out to strategics and try your best to kind of get the entire industry because part of it is learning how the industry would adopt. And I think that's one of the best reasons to have a strategic involved.
Thank you. And with that note, Sindhu, my friend, thank you so much for joining us today. Um, we all obviously understand that like Chevron is part of this really significant shifting that's going on in our society, and it can't go zero overnight, and isn't that it's not feasible for them. So how is Chevron Technology Ventures helping Chevron itself transform the way it produces and delivers lower carbon energy, both today and looking ahead?
Thanks, Po. Thanks for having me here, and thanks to SOSV. And thanks to Corina for endorsing strategics. That was great. So, building on what Corina just mentioned, right? Leveraging existing infrastructure, leveraging domain knowledge that has been accumulated over 150 plus years. Why should we diminish that, right? Because if we diminish that, we would have to start at the very beginning again. We would have to start at the beginning of the scale. But if you use this existing knowledge and infrastructure, we are going to build and ramp up quickly. So it's very important to keep that mindset. And as you know, Chevron's, vision or tagline that you would see everyone everywhere is lower carbon energy. It's all inclusive. And at the same time, we don't want to compromise affordability and reliability, and also delivering this at scale. So the economics has to work, right? So it's very important to understand these parameters and the framework under which you're going to work and deliver lower carbon energy. So the way that you can think about, or at least when we in CTV, we are thinking about how we are enabling Chevron to deliver lower carbon energy. This is by bringing external innovation to Chevron. So you can think of CTV as an off ramp to bring external innovation. And how is that helpful to Chevron? Because you cannot do everything on your own, right? And so it accelerates the pace of innovation within Chevron. It brings new ideas, new mindsets, and new thought processes to Chevron. So that is how CTV, enables uh, Chevron to deliver this lower carbon energy at a affordable, reliable, and evergreen manner to society.
Yeah, and Sindhu, can you give us an example or two of like a company that CTV is working with, regardless of how you might have whether you invested or not, but that sort of embodies this all of the above mindset rather than the either or mindset that dominated the climate tech conversation for years?
Yeah, so it is the all of the above mindset that Chevron has always embraced, and that is because throughout the history of energy sector, you would see that energy develops. The development has been through different pathways and different timelines across geographies. So why would that change now? So you do need a portfolio approach to energy transition, and if you look at our portfolio, you will see that same theme. For example, I can think of one of our companies, which is a point source capture company that offers modular membranes. But this membrane is not only for carbon capture, it's a platform technology that enables gas separations. So you can see where I'm headed with that, right? As the carbon market matures, this technology is now able to service other separations within oil and gas sector. So what happens with that is they are able to build their presence, their credibility, and as a group that can scale a technology. So when the carbon market is mature and when companies are ready to take that bet, they are ready. They have already scaled it up in a sector that is adjacent to where you need to be. So that was what really attracted us to this company. Another example that I can quote is one from circular economy. One of my portfolio companies is recycling batteries, and the reason we were attracted to this particular company is because the entire process was lower carbon, and the economics made sense. So you have to be cost competitive with your incumbents. If you're not, you really need to understand who is going to pay that premium and whether there is a robust carbon policy that is going to support the technology if a premium is required. In the absence of a premium, you should really be very, very sure and clear that the technology can stand on its own 2 feet and be cost competitive and can scale. Ultimately,
Uh,
it's about scale and economics.
let me take that question back to Corinna for a second. Like, Corinna, I mean, I struggle with this. I talk to a lot of global corporates who will say, and they have sizable existing businesses in new sustainable versions of what they do, and they'll say, like, this coming year, we really don't even know what people are gonna pay. Like, and they're actually selling stuff. Like, it seems very fluid. It seems it's more culturally bound, kinda like tipping is culturally bound. You tip a lot in San Francisco, and you tip less in Florida, and, like, do you feel like anybody really knows who will pay a premium and why? Does it ever feel solid ground?
Yeah, I think the idea of paying premium is something that we really hope for, but we don't really see practice in a capitalistic market from that perspective. It has to be competitive, or there is a premium. It's because there's a competitive advantage or product advantage, and we see that all the time in terms of paying more for value, paying more for better quality, and so I think part of it is incumbent on us to be able to position that well, to articulate those points if there were expected to be a premium related to that. But I think if you're comparing it to, let's say, general things, then it would be very difficult to pay premium just because of the way it's manufactured. Us as a society, and this is probably way too generalized, but we're not really we don't have practice in thinking that way. We pay a premium for a reason, and I think and that reason in terms of sustainability is not 100% demonstrated yet. Of course, it would be great to strive to that. And I think part of that is why does the premium exist? It's because we're trying to scale up something when the industry is already at scale and they're able to deliver an outsized advantage. So we still need to solve that problem. And I think some of the ways that companies are doing it well is being choosy about the markets. So, back in the day when you're thinking about going straight to, food or energy, the scale is so massive, there's no way to grow into that volume. And Khorcheska even mentioned this in terms of where she's starting to where industry is. So perhaps part of the solution is to find pockets of industry that operates at a different scale and a different price point and grow into it. And we see this with biotech as well in terms of other industries that command more. There's a reason why a startup in drug development, drug therapeutics is more so than let's say a biofood. And that's because of the scale and the premium that the industry offers. So I think we need to take that into consideration.
So, if I might just add on to
Yeah.
what Corina just mentioned. So, Corina, one of our portfolio companies, for example, what we saw or what was attractive about that company was the feedstock flexibility. So, that helps with the siting, right, and different geographies and builds in resiliency into the system. So, it's just, the point that you were trying to make about how does a company select its beachhead market and how that technology really aligns with that beachhead market, right? So that you can solve these problems about premiums, about resiliency, and about scale and economics.
I wanna bridge back to, Khorcheska here off this thread. I personally have found that very often as I go visit some of my partners' facilities and factories, they've, for a small expense, been able to implement something. Essentially, it is kind of a self-tax, one might say, but what they're doing and what their actual goal is to gain market share. Because when they bring in for visits, say, their own corporate customers, often retail, right? Big retailer, they win the account because the retailer likes and appreciates what they're doing and how they're operating. And so it's not about unit costs, it's about gaining that market share, gaining customers. Jessica, have you seen or heard this kind of impact for some of your partners in the nylon space or the other chemicals that you're doing?
I think like it's very very straightforward, and that's what basically biggest industry is trying to implement right now. We've seen that change within this year, actually. So what's happening is the nitrous oxide abatement technology that been developed about like 20 25 years ago by DuPont that like requires like massive implementation of the filtration units and rare metals and stuff like that. So it's only can capture just small portion of the nitrous oxide. And then like a big players of that industry know that. So like what they're trying to do is find actually technologies that can remove that pain points from them and then can help them to reduce the risks on regulation that industry on that such as like so toxic gas. And that's right now is the main interest is to focus on the companies that actually have some real technology in place and real volumes production of, let's say, adipic acid on nylon 66 so they can test samples. So we provided that then samples of the adipic acid. They made the nylon 66 polymer and they even spin it to the thread. So right now we actually made first in the world spin down the nylon 66 into the thread that goes further to the retail and the textile. And this big industry partners took that samples to the biggest shows in the world, in the plastic shows in Shanghai and in Europe, and showed the samples, trying to win the markets. And then now can just say, you know, guys, finally there is a company that can produce real high purity bioadipic acid out of the wood waste, and you can polymerize it to nylon 66. That never happened before.
Great. So I think, let's talk about the kind of 800-pound gorilla in the room, and Sindhu, I'm going to steer this one to you to start, right? Like every startup says, oh, we're not relying on carbon pricing, we're not relying on climate policy, but let's just declare it as least what it, at the very least, it is meant as a bridge to help get us to a day of no green premiums. And yet we also know that it varies by continent. We know it is related to policy, so it might be temporary. Would love to hear how Chevron Technology Ventures factors in climate policy and carbon pricing when you're evaluating technologies specifically for investment. Uh, and are these external signals, shaping your strategy?
As an investor, definitely, CTV is not averse to anything that unlocks the value stack, right? Or anything that unlocks us to get to scale and get there quickly. But at the same time, we also need to understand that there has to be a framework for this. And if you think about it, carbon price, for example, can be a fundamental core framework, right, or a point around which you can build out the other policies that support carbon price. And carbon price is something, for example, you can think about it from a global perspective as well to set a carbon price, and that can be a very efficient climate policy. And then the other policies, RINs and everything else can kind of complement this key policy, if you want to call it that. But at the same time, we should also have policies that support innovation, because innovation is key to where we need to get. I always talk about, I don't talk about colors. I always talk about a scale where we are going to lower carbon energy, and maybe the lowest denomination is green, right? Or maybe it is not for that technology. Maybe it is 70% there, right, for that technology. So that is the lens that we are using. So if there is a way or a path to unlock value or to scale, definitely, and if there is we kind of rate the risk that this premium or this policy is going to support the technology at least for the next 4 to 5 years. And then, the technology would be at a point where it could be cost competitive, stand on its own, and get there. Khorcheska, the point that you made, right? You start here and you get there where you need to be. And then how you influence and you manage your narrative around that as you speak to investors and to the community. So these are some of the points that we look at when we are trying to assess a startup. And if policy and framework is required initially, so be it. But we definitely need line of sight of the company being able to stand on its own and do well in a competitive environment. Chevron always says we are built to win in any environment, but I think that's a huge statement. But you can define that environment. So where are you going to win, right? And what does that take?
Corinna, I feel like I gotta make clarify Rose. SOSV does not ban investors from talking book at our climate summit. This isn't one of those types of podcasts. Like, please share with us some companies that you're excited about that you feel like maybe speak to this topic that you've invested in or that you're looking at. Like, would love to hear like concrete examples of that manifest this.
Yeah, yeah, I think this is really important. Material Impact has a company, it's called Debut Biotechnology. And when we first invested, we were focused on, a cell-free technology for continuous manufacturing. I was particularly focused on that because industry doesn't manufacture in batches in so many ways. We're talking about getting to the same kind of scale that is required. Like many startups, there's been pivots along the way. Um, and Debut right now is trying to figure out how do we introduce, a bio ingredient that doesn't necessarily need a price premium to get that through. And this goes back to my earlier comment about selecting that initial market, that beachhead that Sindhu is talking about, and we're focusing on beauty first because why? They don't command a ton of volume initially, and there's a high price premium, but we stick to performance in terms of high purity and so forth. And it's a interesting way to get into the market. We did not set out thinking we're going to be only beauty, but we also realized that we need a good market entry. So I think that's one of those examples that's well practiced and thinking about that. And then the other is actually a company called Hue, where we're both co-invested in, where what we're talking about is introducing biodyes that is literally a drop-in replacement because we know that the textile industry is steeped in its long-standing capital equipment and how they are, working to produce garments. And it's simply unreasonable to just say, you know what, throw out all that machinery. We need you to buy a bunch of new stuff and start with a new ingredient that you've never worked with before. And I think these are the practical ways in which we're able to, to the theme of the meeting in terms of, is blue the new green? I think these are pragmatic steps. They're different steps in these two companies, but I think pragmatic either way where you're finding a market that fits and you grow to scale, but you're also realizing that industry is already invested and we need to meet them halfway because it's more important that we make some change than absolute change that results in no change at all.
As my follow-up question, I just want to ask here, Bill Gates described that that a lot of the climate funds have funded things that, aren't really like the 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 best businesses at least yet. Though he does spend pages and pages in his notes kind of describing ones that he believes will be, right? The net result is there's certainly been a reduction in capital to the sector, without a doubt. Another way to say it is maybe AI is taking the money. So I am curious with when and less capital is going into these categories, has that affected what you invest in, how you invest, how you strategize about how to build a company?
I think in terms of less money, we also got to think about it in terms of perhaps that, in what we've experienced, we've also had a shift in what we think is a good investment. And I think part of that is to really understand the development cycle of these new technologies and what that length of time is and also to really explore what is that not only product market fit but the initial commercialization. And I think there's more critical thought in there so that companies can ramp and have not only sustainable ambitions but also obtainable market and company goals. And I think that's really important. So we may have been a bit frothy early on in our ambitious goals, but I think part of that, as we're seeing now, is that we still need to have solid businesses. Back to your very first points, and so in my mind, this is really more of a correction in what we're seeing today.
Khorcheska, with that, I'm going to point to you, or to you up? I'm just curious because one might hear you and think, "Wow, that's amazing. Ozone's doing that's great. That was a good use of $50 million." But you haven't used $50 million. You haven't even used $5 million to take the lead in this market. Well less than that. And I just wanna actually ask you about being extremely capital efficient, and how you've managed to avoid the temptation to take a lot of money and spend a lot of money and be actually so ruthless in how you use money at Ozone Bio.
Yeah, that's true. Like we're known as the stingiest company in the portfolio of our investors. So that's we've been very like cost effective with how we spend the money. So I think the main reason is like we both me and my co-founder we're both technical people and we try to minimize the amount of money we spend on nonsense. So, like, we've been actually very effective on using that money in the first 2 years, actually achieving the technical goals and getting our technology really well structured and developed to the stage where we can make sure that we meet the purity, we meet the actually conversion efficiencies, and we've done like really great. The main target was minimize greenwashing, focus on technology development. Don't waste our money on marketing when you're not ready for marketing. Don't waste money on actually doing some business development at the very, very early stages when you're unable to provide samples. So, right now, we will be actually much more confident taking more amount of money and using that money to unlocking the deals with the big industry partners because right now our main target is to scale our production.
All right, thank you. And on that note, I really want to thank our panelists for convening and discussing this. I really appreciate it. Means a lot to me. And I will say thank you and turn it back over to SOSV.